punters are trackside for a flutter, but a cautious Reserve Bank has rained on their parade.
Very disappointing, especially everyone's got a mortgage.
We were always looking for a cut though. They're already too high as it is.
We deserve another cut, and I think we've waited a long time to see interest rates come down.
But the RBA governor says fighting inflation is the main game.
Inflation in the September quarter was higher than we were expecting in our previous forecasts. We are alert to the risk that we have misjudged the gap between demand and supply in the economy in either direction.
The Reserve Bank has kept the cash rate on hold at 3.6%, its lowest level in 2.5 years. It's already cut rates 3 times this year.
The bottom line, though, is we know forecasts are very uncertain, and the further out you go, the more uncertain they are.
Australia is seeing something that's also true around much of the world. That last mile in the fight against inflation is proving pretty tough. The latest news on inflation here in Australia, therefore, pretty challenging, and the Reserve Bank, off the back of that, pretty grumpy.
Not improving their mood, cost of living pressures are being driven by surging electricity prices.
What? At $1 million?
And housing, with property prices rising at their fastest pace in more than 2 years.
We acknowledge that even with this progress we've made, Australians are still under pressure. Those 3 interest rate cuts are providing a bit of relief, but we know that many Australians would have preferred to see more relief delivered today.
Your previous forecasts gave borrowers a lot of hope that interest rates would be cut quite significantly in the next 12 months. Now, those hopes appear to have been greatly diminished or even dashed. What would you say to them?
The board has always been cautious, so I'm not sure I'd describe the way that the board has spoken in its statements, or I've spoken, has given people hope that somehow there's lots and lots of interest rate cuts to come.
Markets are pricing in a 70% chance of another cut by May next year.
I think there is one more rate cut out there, though it may not be until the middle of 2026.
The next move is much more likely to be down than up. When really depends on the data coming forward.
While there's been no help on the interest rate front, the economy is looking a little bit sluggish. Unemployment's on the rise, household spending is virtually flatlining, while property prices are becoming even more unaffordable, while economists say living standards are under pressure.
The squeeze is really on for families at the moment. Australian productivity growth among the poorest in the world, and if the pie isn't getting much bigger, then there's not much room for us to share.
For borrowers, Canstar's Sally Tindall says there's been a surge in refinancing, with roughly 1,000 borrowers switching lenders each day.
Right now, the average owner-occupier is on a variable rate of around 5.5%, but a competitive rate is under 5.25%. There are 42 different lenders offering at least one variable rate under this mark. First home buyers can go even lower. The lowest rate for them is 4.99%.
And for these punters, they're not betting on rate relief anytime soon.